Yet another one right back at you. This time we got AMD, one that's worth looking at. Pretty choppy after hours trading. I would not lie to you. We're talking about this thing started off down, started off up, then went down up 2%, now up 1.8%. What's going on with this stock? I expect pretty good numbers here. They're facing relatively difficult comparables compared to last year, so you got to consider that when you look at it. But I expect good numbers out of this company. I really do. So I think we just dive right into this and see what's going on. You look at the stock's performance over the last year, up 34%. Not crazy when you take into effect the entire market doing similar numbers. Year to date, down 1%, pretty in line with what's going on. I mean, this year's been pretty stagnant. Undoubtedly, but the 5-year performance obviously speaks for itself with AMD. So if you're one of the believers in 2018, you're having a good time. Let's look at these earnings here. Click on that bad boy. So AMD here, putting up a non-GAAP EPS line of 63 cents, which is a beat by 9 cents, and a GAAP EPS line of 58 cents, beats by 12. I like that. It's a good beat from a profitability standpoint. Definitely something I look for in a company, and that's really why this is a position I just added over the last 2 months, 3 months. I can't remember when I started this position. I believe I started my AMD position in May. I think it was May. So it's because of stuff like that. I like to see this, that the company that consistently beats on their earnings numbers. And that's good profitability. I like that. And from a revenue perspective, what can I say? $3.8 billion. Up 100% year over year. We're talking about doubling the business off of a tough comp year. And a beat by 240 million. So not a crazy beat, but it's a beat, and I like to see it. I really do. They do give guidance here as well. Guidance of revenue of $4.1 billion versus a consensus of 3.8, plus or minus 100 million. And non-GAAP gross margin of 48%. So all things considered, this is a company that beat on all three of the metrics, right? The Triforce has been conquered. Profitability, revenue line, and that's right, guidance. They beat them all. So, in my opinion, this typically warrants a stock to be up. But again, this year trades a little bit differently than we've seen in previous years. So the market's just as wild as it's ever been. So it is up currently. So I like to see that for the full year. They're expecting revenue growth of around 60%, up from the guidance of around 50%. They're expecting non-GAAP gross margin to be 48%, from the prior guidance of 47%. So nothing really changed there. 1 percentage point is not crazy newsworthy, but it's all right. We like talking about it. Let's bust open this press release. It's what we like to do. I love a press release, man. I love it. What can I say? Things to note: operating income came in at $831 million, and net income at $710 million is really nice for this company when you take into account what they're making in revenue. $3.8 billion, but $710 of that's coming back as net income. That's nice. It's a good level of profitability, and I like this company for not being necessarily a company that's it's of a large size. We can't deny it, but to see a good net income line at a company that's still got a lot of room to grow. At this growth rate, you're typically not seeing companies post profitability at all lately. These high growth companies typically are those that aren't profitable at all. Yet AMD is able to really get the best of both worlds here, grow revenue significantly, and put up a nice net income number there. So I like seeing that. I really do. From a financial perspective here, we see quarter-over-quarter growth of 12%. Gross profit, obviously seeing significant growth here, up 116 year-over-year and up 15 quarter-over-quarter. Net income up 352% year-over-year, because you see, that's what this company's doing. They're really working on that margin. As that margin grows, you see it's an exponential growth for that net income line, which I like a whole lot, and up 28% quarter-over-quarter. Expenses saw growth as well, but not nearly as much as you saw with some of these other numbers. So that's not concerning by any means. You have to spend more, obviously, as your business grows. It's just what it takes. Non-GAAP, we typically skip over that. Come on, I'm a GAAP guy. That's me. Lisa Su, fantastic CEO, incredible stuff. She's incredible, just incredible, Lisa Su. So from a couple of the highlights here that they're giving, driven by a computing and graphics segment, we'll see what that looks like. We saw gross margin looking good, looking good. Let's get into some of the segments. Let's do it. Computer and graphics segment was up 65% year over year. That is where you see a significant growth model there. I mean, that's fantastic. 2.25 billion. Obviously, the majority of their business here this quarter was done in the computer and graphics segments. Obviously, because it's the largest segment of their company, so that's not a shocker. Client processor average selling price grew year over year. And quarter over quarter, driven by richer mix of Ryzen desktop and notebook processor sales. So they're selling the more expensive models here. That's really where you see a growth in that price sales mix there. That's what you like to see. GPU average selling price grew year over year, again driven by the sales of higher end products, and that's what's fantastic about that, because they got a lot more margin in those higher end products really too. Operating income for the segment as a whole was $526 million, which is obviously fantastic. They'll say the increase are due to higher revenue, which makes sense because this is in line with what you might have expected for them. The enterprising, embedded and semi-custom segment came in at $1.6 billion, which is up 183% year over year, driven by higher EPYC processor revenue. Fantastic to see that number. You really like to see that. All other operating losses came in at $93 million compared to $60 million a year ago, and $100 million of the prior quarter. So not shocked to see that increase a little bit. That's nothing significant in my opinion. As far as PR highlights, they announced the acquisition of Xilinx. So remain on track to close by the end of the year. $4 billion repurchase program. Other than that, these are just general highlights of the business. So not shocker. We see it all the time. As far as the outlook, we saw that, which I'm pretty impressed with. I really like what they're doing in terms of the guidance there on this company. It looks good. Believe they're including with me I hunt down the balance sheet daily. You can't keep me from a balance sheet. That's one thing. These companies, if they don't show me the balance sheet right away, I'm sending an email to the press team, right? I need to know what's going on here with this balance sheet. I click this contacts and FAQs or something, and I'll email them. I got to do what I got to do. I need that balance sheet. Let's take a peek at this. Total current assets here. Give me a 6 months comparison. I like that. Total current assets at $7.8 billion compared to $6.1 billion. Due to a really increase in cash position for the most part and some short-term investments growth. Good to see that. Total assets in general saw an increase, 10.6 compared to 8.9. So growth right around $2 billion added to the assets line. See what the liabilities are holding for us. Total current liabilities at $2.8 billion compared to 2.4. So some slight growth there. Not too shocking, all things considered. We see stockholder equity saw a pretty decent increase over the last 6 months, $7 billion compared to 5.8, so a growth over $1 billion, $1.2 billion. It's what I like to see, and again, due to the profitability state of this company, I'm not shocked by this, ability to grow the balance sheet, but I'd like to see more. I'd like to see more on this balance sheet, whether it be from cash and cash equivalents. I would like to see a little bit of a growth in that position. Certainly, I think they can get better in that aspect, but I just think assets in general, I'd like to see more. If it includes raising debt, it might take that, but I think they have the ability to. But most of this net income they're bringing in, they're going to put back into research and development, in my opinion, and how they can grow this business. So not bad at all. The stock itself, again, you got to consider is trading at a $100 billion market cap. P ratio, again, used to be astronomical on this, as they weren't very profitable even, come 2 years prior, and it just flipped into the negatives again. I'm telling you, it's trading choppy as crap, man. But a market cap of $110 billion, it's pretty expensive when you talk about a company making right around, all things considered, what was their full year estimate? I want to be fair here. Full year estimate to grow around 60%. Not exactly a full year estimate for me, but we're talking right around $5 in my estimation, right around 15, I'd say 14 to 15 billion dollars they're going to make this year. Trading at a market cap of 110, pretty expensive. We're talking about 8 times the value there, which isn't dirt cheap by any means, but it's not incredibly expensive based on the general market, and a P ratio short of 40 after today. I mean, depending on where it ends up, going to be sitting. I'd say it ends probably level, all things considered. I don't think there's going to be much price action come pre-market tomorrow, or really come open tomorrow. So I say it'll be sitting right around 37 to 38 PE ratio. I like the company because of the growth rate. I think it earns the valuation that it's at. Now you got to consider this is a stock you're going to want to buy and hold for a while. It's a long-term play, but I think it's one that I certainly still like at this valuation. Just not necessarily the best entry point. I think you would have been happier to enter closer in the May range, which is when I added, just saying. You would have been happier to add in the May range. But if you didn't, I think there may still be chances for you to add at the sub 90 level within the next couple weeks. So keep that in mind if this is a stock you're looking at. Value's a little bit higher, but I like the company overall. Hope you have a good one.